Hello and welcome back to the Business Growth Club. This is your weekly recording from us, and in this week's recording we're going to be looking at the subject of return on investment. The reason I'm looking at return on investment is because I want to show you a way to stop wasting money on marketing and sales activities. I also want to show you a way for you to forecast your future income based on how your marketing is performing, and also how to improve your current marketing campaigns. The results we look at as well will inform the next video we're going to be looking at next week on pricing, the final one in our pricing series, and some of the information about return on investment will inform what we look at when we look at the subject of customer lifetime value. So why don't we get started with today's recording. Now the reason we're looking at this subject is because in my experience of working with hundreds of business owners, most of them don't actually know if their marketing is working with any degree of confidence. People will say stuff such as, my marketing doesn't really work, or my marketing's a bit hit and miss, you never can really tell, or we do okay, we get bits and pieces here and there. Nobody definitively says, I have 10 campaigns on the go, and 5 of them give me above £5,000 return on investment, and 2 of them a few £1,000s, and 1 of them just doesn't work, and 1 of them is break even. Nobody can ever give you precise figures, and I believe that's because they don't know what to measure, they don't know how important it is, and also they probably don't know how they can do it without spending all day doing accounting. And as you know, my biggest ambition with the Business Growth Club is to give you quick and easy tactics to grow your business, not to tie you up in red tape. So today we'll look at all of those, why it's important, how to measure it in a minute or two, and how to use the results to really transform your business. Now don't worry at this point if you're a little confused what I mean by the phrase return on investment, or ROI. All that means is the amount of money you make in your marketing campaigns compared to the amount of cost you've incurred to generate something. So if you run an advert that costs £2,000 and it gives you £3,000 worth of sales, then your return was £1,000. Technically you measure return on investment as a ratio or a percentage, but I believe that can be a bit confusing for most business owners, and I think if we just look at the amount of profit you make, then that's a useful return on investment. So don't worry if you're not familiar with that phrase or you don't know what it means. It simply means what profit, if you will, do we make on our campaigns. However, the results of these are very serious. If you're cautious about marketing, that means you limit your marketing and you don't do enough. And that's a major problem, because you know by now from the Business Growth Club recordings that growing your business is just an essential process, and marketing and sales, customer maximization, branding, referral marketing, all of this stuff is all marketing that you have to be open-minded to. Now don't worry, I'm not saying go and waste money on marketing. I'm telling you the opposite, and later on I'll show you an approach you can use so that you can not compromise your marketing spend, so you don't lose very much but you experiment sensibly. Secondly, there's a real danger of only dipping your toe in. Most marketing actually takes a process of testing and measuring and improving before you get the real results. The heavy lifting is done in the early phases and the profit comes in the later phases. Only dipping your toe in means you'll never get to the profit zone, or never seriously into the profit zone. You'll only ever make bits and pieces here and there, and I want more for your business than that for you. Finally, limiting your spend to protect losses is a little silly, because if we know we're going to make losses, we just shouldn't spend at all. The money is better off in our business. So it's a flawed notion anyway, but most business owners might spend £5, £10, £20,000 a year on marketing, simply to protect against any losses. That's the wrong attitude. We need to look at our return on investment. We need to be able to say, if we spend £2 on an advert and we get £3 back, we've made £1, is that a sensible return on investment? Protecting our spend and almost spending a little bit of money so we know we can lose a little bit of money makes no sense at all. So that's not really a strategy for your success. But I can hear that some of you don't really agree with me. I can hear that some of you are repeating this very old marketing adage that I know that half my advertising doesn't work, I just don't know which half. An extremely famous phrase that's been with us since 1934 that essentially says that you can't really measure the returns on marketing and on advertising, so how will you ever know? Unfortunately, that idea is completely and utterly false. It may have been true in 1934, I don't know, I wasn't there, neither were any of you either, but it's not true today. It's actually a myth perpetrated by PR and advertising agencies, and they're either too lazy or too scared to live or die by the results. It's either too complicated to measure your return on investment, or they don't really want you measuring the return on investment because you might just leave. They'll give you ready-made excuses like, it's building your brand. Now you know better than that. You know something like it's building your brand. You can't afford that sort of hit and miss as a small business. Your savior comes in the shape of direct response marketing campaigns. Now, if you're not sure what that means, I've mentioned that phrase before. Basically, it's all the campaigns I ever talk about in the Business Growth Club. That's when you make an offer and you ask the prospect to respond to that offer. It could be an offer for a sale, it could be an offer for an appointment, it could be an offer to download a report or attend a seminar. It doesn't matter what it is. But all direct response marketing campaigns have a definable return on investment. If you speak to a PR agency, an advertising agency, or anyone else in branding, sales, and promotion for that matter, and you say, I want to run direct response campaigns, and they don't know what you mean, well, I suggest you move on, because they're the only campaigns that you can afford to invest in as a small business owner. Now, a little word of warning on what I'm saying there. You can never guarantee the success of a marketing campaign, but by doing marketing properly, following all of the advice we give you in the Business Growth Club, you can stack the odds massively in your favor. However, I'm not talking about guaranteeing your results. That's not what I mean by direct response marketing and only run direct response marketing campaigns. I mean, start by testing small and then you win big. So, when you actually experiment with your marketing, you start in a very small way, spending a small amount of money on a direct response campaign, and then you review the results. And once you've reviewed those results and you know what your return on investment is, you can then scale it up. Now, to do this, you must know your return on investment, because if we follow this cycle here, when we plan a campaign, direct response, following all of the type of good marketing practice I talk about, then we do it, we implement the campaign. Small, we test small, then we check for results. We need to check for return on investment. If we're doing brand building, we'll never know. What will we say about brand building campaigns? Well, more people might know about us. Well, how do we know this? We're not a big company, we can't do market research. So it's hit and miss. It's almost a pipe dream. Oh, you're growing your brand. Am I really? I'm not growing my bank balance, and that's all you care about. If I said to you, you can have a big brand or a big bank balance, I think you want a big bank balance, yeah? Let's cut to the chase. We know what we want in the Business Growth Club. We want successful marketing campaigns that help us to live out our hopes and our dreams and achieve the success we want for our business. And return on investment, we have to measure it, otherwise we'll never know. You can live on that kind of long-term hope of brand building, but it's, is it really ever going to work for you? So once we've gone through that, we plan the campaign, we do it, we check, then we change stuff. We only run campaigns that we know give us a return on investment, and we experiment, and I'll show you how to do that later. And then we act on those results again. So we implement another campaign, and then we plan, we do, we check, and we act again. So we're doing this continuous cycle. That's what you need to be doing. Return on investment allows you to do this. I have run campaigns where I literally spend £50 and then I'll check the return on investment. And then I might adjust a few bits and spend another £50. Then I know that I'm improving, or I'm not improving, so I cut that and I work on the improvement line. Then I start spending 100, then 200, then 300. Then you're spending £1,000, £1,500, £2,000 every month on a campaign, but it only ever started with a small £50, £100, £200 spend. An amount of money you can afford to lose, so you test small, and you don't really care if you lose the money, because you know that you're going to experiment with a few different activities. Some will work, some won't be as effective, but then you will improve continuously the ones that do work, so then you can be at the point when you're spending £1,000 or £2,000 a month on one campaign, and it's giving you brilliant returns. So start small so you can win big. That really is the key to success to all your marketing. I said that return on investment is a simple issue. It's not complicated, but business owners don't do it, and I believe they don't do it because they don't follow this process. Now you know better. If you follow this process, you can turn a very average campaign into a truly extraordinary campaign, and I'll show you some examples of that later on. Okay, so what do we measure? I keep talking about return on investment, but what do we actually measure in terms of return on investment? Now, there's only one figure that really matters, and that's your gross and net income, the actual amount of money you generated. But I actually believe we should be more sophisticated than this. I actually believe we should be measuring at least 4 elements. The first one is the response rate. That's the number of inquiries that you generate. So you run an advert and 10 people telephone you or come into your shop or with a coupon or whatever it is you happen to do. So the response rate, the number of inquiries. Then you want your hit rate or your strike rate as it's known. The number of inquiries you convert to sales. 10 people inquire, but you only make 5 sales, so you have a 50% conversion rate. Then the income rate, this really matters. How much money you've made. If you have 5 customers coming in, but they all spend £5, you've made £25. If they all spend £5,000, you've made £25,000. So who cares how many inquiries or what you convert if you get decent income? So the income rate's crucial. Then what's known as the spin-off rate. That's the number of referrals you generate. Now I'm not going to talk about upsell, cross-sell and all of that sort of stuff or lifetime value. That's for next week's video. So hold that thought for now, but you should measure the number of referrals. Why am I advising you on this? Well, whilst, as I've said, only really income matters, and that's simple. How much did you bring in? What did you spend? Equals return on investment. But the other measures are very productive diagnostic tools. Let me give you an example. Let's say you have a very high inquiry rate. You get 100 inquiries, but you only convert 10 of them to sales. Now that would indicate you've got a poor sales system. Your salesmanship isn't working as well as it could, so we know where to improve. Conversely, we have low inquiry rates, so only 10 people inquire, but 9 of them sign up. We have high conversion rates. That would probably tell us that our marketing has a poor offer or message. There's something about our marketing that's not working, because once we get in front of people, we can convert them. Might also indicate we're incredibly good at salesmanship. But it will give us diagnostic tools. It will give us some insights into what might be going right or wrong. If you just have a campaign and you say it's made me X amount of income, then you don't know how to improve it or how to extrapolate it. And I'll show you some very interesting examples in a few slides' time on how that really works. As I said about referrals, they seriously matter because I've done this several times with people. We look at certain segments and we find that certain segments really do generate a great body of referrals. Now, if every customer could bring you one new customer by way of referral, what would that mean for your business? You get into a never-ending cycle. Now, I'm going to run a whole video on referral programs because if you can identify that segment and have one new referral, it does become a genuinely never-ending cycle. I know that sounds too good to be true, but it isn't. But for now, measure it. And you might find that if you're selling business to business, there's something about maybe professional service people of a certain age, maybe 40 plus, who are really good at giving you referrals. That's probably because they've been in business a long time. Because they're in professional services, they meet with a lot of other business owners or other salespeople, and because they're of a certain age, people respect them. Because they're 40 plus, people turn to them and say, do you know a good solicitor? Or do you know a good plumber? Because they've got to a certain age and they're revered, they're respected. Whereas maybe a 20-year-old, you might not ask a 20-year-old if they know a good solicitor because you probably assume they might not because they're only a young kid really. Whereas a more mature person, you probably respect them more. You feel they've got more life experience. Now that's just one example. Maybe you'll find that doesn't work for your business, but I've certainly found that to be true for a lot of professional service firms. It also works for a lot of tradespeople. They find that there's a certain age of person, a kind of maybe a parent whose children are grown up, who pass a lot of referrals, just because they're more well known, they're more settled, and again they've got life experience and people refer to them. So it doesn't matter what it is for your business, but you will find there might be a certain segment that gives you a lot of referrals, and that might make your marketing significantly easier. You might find that you're getting a small return on investment, but these people give you never-ending referrals. Well, all of a sudden they become better than one big-time income, one big payday that is limited because it never really leads to any other business. So they're just 4 measures which I believe are absolutely crucial, but that income is what really matters. Now let's look at the $64 million question. This really is the killer question. Business owners often say to me, I hear what you're saying, but how do I know why people come to my business? How do I know how they got here? It's just 6 words. Where did you hear about us? Where did you hear about us? It couldn't be any more simple. And the number of business owners I meet who don't ask this question, it's a it's an absolute sin. You must be asking people this. People will tell you. You can do it maybe not at the point of a first inquiry, but maybe once you've built up a bit of rapport. But how did you hear about us? How did you know about our store? And they might say, well, I looked at your website. Well, how did you find the website? Oh, I typed into Google. Don't forget, people love talking about themselves. And if you say, oh, I'd love to know why you found us, then, people will have that conversation. I've asked this question now to, I don't know how many people, I'd lose count, hundreds and hundreds and hundreds of people, and I've never had somebody say, oh, I don't know. I've sometimes had people say to me, oh, I've seen you in lots of different places. I've read a book, and I also heard something on the radio, and I received some letters. And that's when you're doing quite complicated marketing, and then the traceability becomes more difficult. But for most people starting out, where did you hear about us? They'll tell you. The number of people who aren't asking this, it's an absolutely crucial question. If you are asking this, I'd then say, what else are you asking? Are you really measuring your return on investment? And we'll look at how you physically do that. And here's some common examples. If you're running seminars and events, obviously you're always looking at income, but other items you might want to look at is the attendance rate, so how many people you got in the room, and what your sign-up rates were. How many people from attendance equal to coming on board as a customer? SEO, people often tell me you can't measure SEO. Well, you're looking at traffic, so the number of hits to your website. You're not looking as to whether or not you're number one on Google. That's probably how somebody sold it to you, because it's an easy line to sell people on. But what SEO companies are really trying to get is more targeted traffic to your website. Once you've got more traffic, you then want more sign-ups. So people came on your website, and then they then converted into customers. So sign-up rates maybe onto a mailing list, or onto an appointment, or onto a phone call to your office, and then conversion, how many sales you made. So SEO is not about number one on Google. SEO companies know that. They're really trying to get you traffic, inquiries, sign-ups, and conversion. So that's SEO. Direct mail, simple number of inquiries, or traffic to your website if it's a lead page type postcard, and crucially the number of sales you made. For online advertising such as pay-per-click and banner advertising, display advertising, obviously you want to know from the number of clicks how many people you signed up. So did you get them onto your mailing list? Did you get an inquiry from them? And again, the conversion. Advertising, inquiries and sales, quite simple. How many people inquired and how many did you get sales? I got 10 phone calls, I got 5 sales, so we got a 50% conversion. Now let's have a look at some items that people tell you you just can't measure. PR is a classic one. Well, you can, because you do direct response PR, so you'd be targeting them to download a copy of a report, to visit a website, to attend an event, so you're looking for traffic or attendance. You're looking at, once you get the traffic, do people download that report or that piece of information? And then you're looking at what's known as in-cycle sales, so you want to know how many of those people then bought in a defined period. There's also something else you can do with PR if you're running and you insist on this, just brand building PR. I don't advise it, but if you want to, you're dead set on that idea. What I'd advise you to do is to run PR campaigns targeted at a very specific segment. So you might run it in some trade press. So it might be you do business coaching for everybody, but in the solicitors magazine, the lawyer magazine, you advertise special training, coaching for solicitors. And then you look in a definable period, 30 days after the advert or 40 days after the advert, how many people inquired who were solicitors and came on board. Okay, you may get a random solicitor who finds you, but through other channels. But that's how you'd know if PR of a brand building fashion would work. So that's how you'd measure that. Of course, that question, how did you hear about us, is always going to work, but even if you believe that's too complicated, that's how you can measure PR, which people will tell you you just can't measure. Social media, again, is Twitter working? Is Facebook working? I'm talking about all the tweeting and the posting and the interacting, not the advertising now. Again, traffic. Look at the traffic sources on your Google Analytics. Is it all coming from Twitter? Look at specific campaigns. What I often do is I'll set up a specific lead page. You all know what a lead page is, and you all know for a very cheap price, £5 or something, you can set up a new domain. So I'll set up a new domain and I'll advertise stuff quite heavily on Twitter. So I might have a free report I'm giving away or a webinar I'm promoting. and I'll use a specific tracking code. So I know from that URL, that www.thisspecialoffer.com, that people are coming via Twitter. So I just know the traffic sources, but sometimes on analytics that can go a bit crazy because it will just tell you general traffic sources. But I want to know how many people responded to a promotion, how many of those signed up for the webinar, and how many of those became clients. So you have that great sophistication. Once you get kind of bigger at marketing, you do more campaigns, there's a lot more complicated stuff you can do in terms of tracking URLs, and there's software you can buy, but I don't want to go into that for now because it's probably not something you need. If you are in the position where you're running 10, 20, 30, 40 different campaigns, then do contact me and I'll show you some software you can use that makes personalizing URLs or using tracking codes on URLs through your website a little bit easier. But for now, it's probably expensive and complicated for what you need. But if you are interested in that, let me know. Websites. Everybody tells me, oh, well, a website's just a brochure. Well, yes, it is. It has a brochure element. And I won't go into certain landing pages or anything for now. But we can look at the number of conversion rates that we have. So how many people attending our website, 100 unique visitors, how many of them do something? Make a phone call, download a report, join a mailing list, whatever, follow a blog, whatever they do. Secondly, and this is more advanced, how long do they stay on our website? What's the bounce rate? What's the number of clicks? I find that people on my website look at 7 different pages, which is an awful lot of pages on a website. You can look at the number of return visitors you're having. So your Google Analytics can give you all sorts of insights. So even something like a website, which people will say it's just a business essential, you can measure an awful lot of your return on investment there. Don't forget, a website is generally expensive, so you need to measure return on investment. Don't spend 3, 4, 5, 6, 7, 8, 10,000 pounds on a website and not know if it's working for you. Here's a crucial one: informational products. Lots of you will now be doing the two-step marketing I advocate for an awful lot of industries. The classic example is giving away a free video or a free webinar place or a free video series, a free report, something like this. Some information for free so you get people onto your mailing list. How do you then measure, if you've got people onto your mailing list, how many of them become customers? Well, you measure something known as a recovery rate. And now I usually measure it over 12 months, and I'm going to give you a practical example of this in a minute. But over 12 months, you look at all of those people who go into a specific list, how many of those people actually became clients? Finally, newsletters. How do you possibly measure the impact on a customer-only newsletter? Well, it's simple. Measure your attrition rates, the number of customers you lose or become inactive over a given period, whatever the inactivity rate is for your business. Then run your newsletter and see how you reduce the attrition rate. And then you should also be looking at your referral rates coming from your customers, because there's 2 purposes of the newsletter: to reduce attrition rates and to increase referrals. So measure those. Do you see? Every item in marketing has an objective. Even a newsletter has an objective. Well, measure that objective. Otherwise, you're fighting blind, and you'll stop doing it. And once I've measured return on investment with people, I've found they've been doing campaigns which have given them a huge return on investment, and they just didn't know it was happening. And we'll be looking at some examples of how that works in the coming slides. So now I've explained return on investment, what it is, how important it is, how you must measure it. Now let's have a look at how important this is for a business. I'm going to take a normal business. Now, I've kind of modeled this on some campaigns that I know people run, and these figures work out. A few of them I've rounded to the nearest 100 just to make the maths quite easy, so you can see it on the screen. I don't want to give you a kind of boring maths lesson, but essentially I've taken a typical business, and I'm saying they're doing 6 different marketing campaigns. They're doing some sales letters, they're doing 2 types of postcards, they're running an advert, they're doing seminars, and they're doing a webinar as well. Let's have a look at their return on investment on each item and why it matters. So, the company is sending out 1,000 letters per campaign, and I'm just going to say the cost of that is £1,000, £1 a letter. It's quite an expensive letter, but maybe you've got some teaser copy on the envelope. Maybe you've enclosed a little bit of extra detail, such as a leaflet or something into the letter. So it's more advanced letter. So it's cost you £1,000 to produce. Now the next column is the cost column, and this is absolutely crucial. You can't just measure the cost of your materials, so actually your sales letters or the cost of an advert or whatever. What you must also record is your time, not just in preparing them, but crucially in attending the appointments. Because these letters have generated 10 appointments. 1,000 letters equals 10 appointments. That's brilliant. You know, we're doing well. We've got 10 people. We paid £1,000 for the letters. However, it costs money to attend appointments. So let's look at 10 appointments. Let's imagine an appointment takes 2 hours. Let's imagine you paid £50 an hour. That's your real term rate. Let's say each appointment costs £100. It could be you believe your rate's £25 an hour and each appointment takes 4 hours, whatever. I'm going to use £100 for the sake of argument, and that works out about right for a lot of businesses. So that means to attend 10 appointments, it's cost you £1,000. This is known as the real cost of sales. People talk about cost of sales being the letters and how much they cost to produce, post, and print. This is the real cost of sales. The reason you do this, even if you're just a business owner who attends the appointments on your own, and of course you're not paid a salary, you take the profits from the business. The reason you measure this is because you want to know, once you get big and you grow your marketing, you want to know, could you afford to hire somebody who will be able to attend the appointments for you? Because if you're going to make all the sales, you're going to limit yourself to the number of sales you can physically make in one day. If you can only attend one appointment a day, you'll only ever make one sale a day. Well, you could be making 100 sales a day. Okay, that's extrapolated and it'll take you time, but you're not always going to be the person doing this. And whilst it can sometimes be easy to do cheap marketing because you're not paying for your time in the early days, in the long run what happens is you hire somebody, you then continue to do the marketing you've always done, like these letters, and you realise that you used to make a profit and now you're making a loss on it. Major problem. So always account for your time. The easy way to do that is to figure out how much it would cost to hire somebody like you. It might cost £20,000 a year, it might cost £100,000 a year. Now £20,000 a year, obviously that's about £10 an hour. Just divide 20,000 by the number of weeks in a year and the number of working days, and you'll figure out an hourly rate. Or if it's £100,000, whatever you believe it would cost to recruit somebody in a role similar to you, somebody capable of signing up people to sales. Or if you're in an industry that could have a salesman, how much a salesperson would cost you. And then the number of hours you spend on appointments becomes that cost. And as you can see as we go through these examples, sometimes that cost can be greater than the cost of running the adverts or the sales letter or whatever it happened to be. So our example of this letter, £1,000 to do that, 10 appointments, so the total cost is £2,000. From 10 appointments, so that's the inquiry rate, we get 5 sales. So we've got a 50% conversion rate, which is good. And let's say people buy a £2,000 item on average. Somebody might buy a very expensive one, someone buys a cheaper one or whatever, but basically the total income is £10,000. It costs you £2,000, so the income from that, the return, is £8,000, which is pretty good, isn't it? We spent £2,000, we made £10,000 income, £8,000 profit. I'm sure you're following these figures. I can make it even simpler for you. Basically, you took £10,000 in, you spent £2,000 going out, so you've made £8,000. Let's have a look at the example of a postcard. This postcard, they're sending 3,000, they're costing about 70p each, so they're costing us 2,250. However, this postcard generates a lot of appointments. From 3,000 postcards, you've got 50 appointments. Brilliant. However, there's a cost to those appointments, and assuming the same ratio as we had before, it's actually going to cost us £5,000 to attend 50 appointments. Now, that's greater than the campaign. That's twice as much as the postcards cost to design, print, and post and distribute. So we've got a humongous cost there, twice the original cost. But we've got 50 appointments. However, only 15 of those become customers. And let's imagine it's a £2,000 item again, so we've made £30,000. However, we have gone from 50 appointments to 15 in the number of people signing up, and we'll look at that later as to what that might be telling us. So we've made £30,000, but it cost us nearly £8,000 to run the campaign, so we've made £22,500. Let's have a look at another campaign. Let's have a look at a postcard campaign. Now, the postcard campaign is a different style. Let's say we were experimenting and we did a different type of postcard. The same cost, so still the 2,250. However, we only generated 10 appointments. So we've gone from costing £5,000 to £1,000. However, this campaign got less inquiries. It only got 10, not 50, but 8 of the people we met became customers. Now that might be telling us that in the first postcard, lots of people inquired, but they weren't very well qualified. The second letter prevented all the time wasters because most of the people we met with, 80% of them, became customers. £2,000 item, so again we've got £16,000 income. So the return on investment, okay, so we're only making an income there of 12,750. Now next week we're going to look at how you actually look at the pounds you've spent and how that generates an income. So we'll be revisiting this one. But as you can see, much less inquiries but greater conversion, and we'll come on to what this really means next week. Advert. If I told you I was running an advert for £3,000 a month and I ran it every single month, so it's 3,000 times by 12, so £36,000, and it generated 120 appointments, you'd probably be pulling your hair out. And the cost of attending those at £100 an appointment would be £12,000. So as you can see, we're spending £48,000, a serious amount of money. On the surface, if I told most business owners I'm spending £48,000 on advertising in just one magazine and I do it every month, you'd believe I was crazy. However, we have a 50% conversion rate, which is not good or not bad. It's probably somewhere in the middle. And I'm selling a £2,000 item, so my total income is £120,000. Take off those costs and we've made £72,000. So do you see how now, if you're starting in a small way, and you're experimenting with adverts one month and another month and you kind of see the different results, what happens is you can then hit on gold, you know what works, and then you extrapolate it out every single month, and that's how you make £72,000 a year from just one marketing campaign. Let's have a look at an example of a seminar or a webinar. So this is a seminar, and we sent out 25,000 flyers or postcards or whatever at a cost of 17,500, and we got 100 people to attend the event. Now that's about right, actually. You're looking at probably sending out about 25,000 postcards to get 100 people at an event. That's a very general figure, but don't be surprised to spend £18,000 to get highly qualified people in the room. Now, to attend 100 appointments, because it's a seminar, you sell at the end, so you don't have to attend the appointments in a physical sense, you just see people at the end. You do a closing pitch. So I'm going to say that the event costs you a couple of £1,000 and venue hire, and it also costs you a little bit extra to prepare the material and all of that sort of stuff. But basically, as you can see, you're spending over £20,000. Now, of the 100 people attending, 20 people bought, and they bought an item for £1,000, so they came to £20,000, so we've actually lost £500. Now, we'll revisit this example in the future to see how you can turn that into a profit, but you can see that even getting 100 people to a seminar, it's very expensive and we might not make a profit. Let's have a look at a webinar. A webinar may be different. A webinar, we still send out the same amount of information, however, we don't host a physical event. We just host webinars, or we give people a couple of options. So the postcard doesn't say attend a seminar on X date, it says attend a webinar, sign up here to see your webinar. So doing that, you might actually get a few hundred people. That's about right. You'll probably get twice as many inquiries for a webinar in a very general sense. However, less of them will buy. You'll probably only get the 20 people you got originally. But it costs you much less to host a webinar. You only needed a bit of software and a few emails, so instead of costing you £3,000, it cost you £500. So we've made a profit of £2,000, which is not bad. It's better than the seminar. Again, next week we'll look at how we might turn that into profit. So can you see now how crucial it is to measure this? Now it's incredibly simple. I'll show you later how you can use a template to record this in no time at all. But we've seen the huge differences on our campaigns. We've seen a postcard campaign giving us 22,000 or 12,000. We've seen an advert giving us 72,000, but a seminar not giving us any returns. And we spent £20,000 on it, and we've made a loss. So it's absolutely crucial, and this is what a typical business might look like. Now, what a lot of business owners do is they actually just measure their general marketing return on investment. So they'll say, we spent £10,000 on marketing, and we got £20,000 in. They didn't look at the real detail of it. They didn't break down all of their campaigns. Take the direct mail. we had a letter, one postcard and another postcard. Now if you blend those figures together, you get to a reasonable profit figure of maybe £12,000 or something. However, as you can see, one of the postcards gives us 22,000, whereas the letter only gives us 8,000. So whilst the average might be relatively average, one of them is seriously profitable. So it's absolutely crucial that you break down the figures and record the exact return on investment. Now let's have a look at something which is a lot more complicated. As I said, some of you will be running two-step campaigns. So you'll be looking at campaigns, maybe online advertising is an example I'm going to give, pay-per-click, where you're downloading free information, free reports, free videos, something like this, a way of getting people on board. So they join your mailing list, and then over time they become customers. So that permission-based marketing we've explored so many times before. How do you measure that? Well, here's an example. Let's look at a pay-per-click campaign to download an informational report and a video series. Now we're paying £3 a click, and we've done 1,000 clicks, so we've had a £3,000 budget. Now we know that of those 1,000 visitors, we'll have a 20% conversion rate, so we generate 200 leads. Now we know from those people who download the report and watch the videos, we know that over a 12-month cycle, 20% of them will turn into customers. So from 1,000 clicks, we'll get 40 customers. Now, how do you measure return on investment? Total spend is £3,000. 1,000 clicks, £3 a click, £3,000. We get 200 sign-ups. We get 40 new customers. Let's say we know that on average those customers spend £197 in the first year. So we know once they become on board as a customer, we're going to make £197 income out of them. 197 times by 40 gives you just under £8,000. We spent £3,000, so we make just over £5,000. So we spent £3,000, £8,000 came in, we made just under £5,000. That's how you measure your return on investment on a campaign like that. You just need to be more long-term about it. Now, I did promise you in the beginning that we'd look to see how you can forecast your income. Now, I'm going to give you an example now of one of my campaigns. I've actually simplified the numbers for the sake of argument. So whilst the income works out about right, I've kind of simplified it to stick with 20% conversion and 20% conversion from mailing list to customers. I've done that because I want to keep it simple for you, but basically the maths work out. So let's imagine we're spending £2,000 a month on a pay-per-click campaign, and we've done it for the last 12 months. We know, as I've said, we have a 20% conversion from clicks to the mailing list, and from the mailing list we have a 20% conversion to a customer over a 12-month cycle. And we also know that a customer gives us £197 per year, so that's their income for the year. So how do we predict our income? Now, we spent £24,000 producing 8,000 clicks. That gave us 1,600 people onto our mailing list. And you've heard the phrase, the money's in the list. So we'll see if it really is. Because from that list of 1,600, 320 converted into clients. So what we have is 320 times 197 gives us £63,000. Return on investment is £39,000 because we looked at £24,000 as a cost. So if I told you I'm going to spend £2,000 a month on an advertising campaign, then you might believe I'm a little crazy, especially if I'm just giving them a free informational report. However, I know my conversion rate and I know how it works, so I can confidently spend £2,000 a month and I know what my returns will be. So I know that I spend £24,000 this year, in a year's time I will have brought in an income of £63,000 off that one campaign. So you can see how you predict your income. Now this will have started by spending a few £100s a month. Few £100s a month experimenting, so I get a good conversion rate, and then from conversion from the mailing list to clients I get a good rate there. So I know I've backed a winner, and then I've just ramped it up and ramped it up and ramped it up to spending a couple of £1,000s a month because I know what my returns are. I know the percentage from every £1 that somebody spends what my income will be. So I know if I look at my database now, I know that if there are 1,600 people on a list, I know that I've got £63,000 coming in, and I get a return of about 40,000. So if I told you my current list is about 5,000, then you can see how much money I've got sitting in that list. Now I'm going to have to wait 12 months for that to mature, and it's an average figure, but I know roughly how much money is sitting in my mailing list. Now do you see how important mailing to your mailing list is and marketing to your mailing list? Now, it could be that I'm sitting on significantly more income or significantly less income, but you can see now how important measuring return on investment is, because a big figure like making £40,000 on one marketing campaign, would you like to make £40,000 on one marketing campaign? Of course you would. That all comes from spending a few £100s on some experimental campaigns and doing that cycle of improvement, continuous improvement cycle. So if we break that down in a little bit more complicated level, and I'm going to do this in a real example next week so you can see exactly how it works. We know for every £1 we're spending, we will get £1.63 in profitable returns. So that's our profit after cost. So we spend £24,000 to make £39,000. So we get £1.63 return for every £1 we spend. Now, that might not sound very much. You might be saying to me, I've spent £24,000 and I've got £39,000 income. But once you know these figures are reliable and robust, and we'll look at that in more detail next week, what if I don't spend £24,000? What if I spend £240,000? I'd create £390,000 income after costs. Income after costs, a massive figure. What if I spent £2.5 million? I'd get £4 million in income. Now, for now, these are probably huge figures. And I'm going to be looking in more detail next week how these figures work out. And I'm not trying to say now that if you measure return on investment, you'll get to £4 million income from a campaign in 6 months. This takes several years. It takes that continuous process of improvement. But you can literally grow, especially with something like pay-per-click or something very traceable. You can grow massively and massively and massively. We'll look at this in more detail next week. But if I said to you, spend £1 and I'll give you £1.63 back, all of a sudden you'd be very keen to be spending that amount of money. And that is literally how you predict your income and your forecast your future performance. So you know how many people are on your mailing list, you know what your return from £1 to £1.63 is, and you know how profitable you will become in the future. So in summary, you've seen return on investment is a crucial issue, and it only takes a few minutes to record your return on investment. How long would it take to say, this is the cost of producing these letters, this is how much time it took to attend the appointments, this is what sales we made, this is our return on investment, this is our profit per campaign. Next week, I'll actually give you an Excel spreadsheet, or a template spreadsheet, that you can use where you just type in a few numbers and it will give you the answer. It's automatically calculated, so it couldn't be any easier. But as you've seen, it's well worth taking a few minutes every month to review your marketing campaigns and see how successful you are. Because if you go through that process of continuous improvement, you could go from spending a few £100s a month to a few £1,000s a month, and you could be giving yourself a £40,000 profit on a campaign, like the pay-per-click campaign we looked at. Now, in another future video, I will show you in more detail how you continuously improve a campaign, but you can see now how the theory works. However, keep extrapolating, as we'll look at next week, and you could take £39,000 profit from a campaign to £4 million profit in a campaign. Again, as I say, I'm not saying that's going to happen overnight, but that could happen over a couple of years in a business, and it does. You can extrapolate in that fashion. But now you can see the real value of measuring return on investment. You can also look at how you just can't be afraid to experiment. Start small. Never spend more than you're prepared to lose. Spend a few £100s a month. Improve, improve, improve. Then spend a serious amount of money. And then you win big. Start small and then you win big by following that model of planning. Plan a campaign. Direct response campaign. Do it. Check for results. Continuous improvement. Act on those results. So you redeliver. Plan, do, check and act. Continuous cycle and you will really profit. So as I say, return on investment is very, very simple, but it can really transform your business. Next week I'll show you how a totally normal business could be sitting on a serious amount of money just because they haven't done this properly. Now don't take that as a negative. The fact that you've not done this before really doesn't matter. You know how to do it now, and you know how much of an opportunity it represents for your business. So don't worry about all the years you've not been doing this. See how you can do it. Next week I'll give you that template so it's even easier, and I'll show you how a typical business could be sitting on a gold mine. The example I'm going to give you is one for my business from a couple of years ago. And I'm going to tell you that we made a couple of £1,000 profit on a campaign. We ran a mailing campaign and a few £1,000s profit. So what? I'm going to show you how you can turn that into a several £100,000 profit, and it's a totally normal example that any business can use. The campaign costs a few £100s, so it's an amount of money any of you are probably spending on marketing. That's probably enough on return on investment. Like I say, huge area. We're splitting it over a few videos. Next week we'll pick up the baton again, and we'll really start to look at how you could use it as a business. This week I want to show you the theory, and it's been quite number driven and quite theoretical. Next week I'll show you the practice, so get quite excited about next week, because I'll show you how you too could be sitting on a gold mine, how to find out if you are, and how to mine it if you really are. So thank you very much for listening. Go away and start to think about this in the coming week, how you can actually measure your return on investment. And next week I'll give you that template so you can use it. So thank you for your time. Have a great week in business. Take care for now. Thank you for listening. Goodbye.